Question 1. Topic: Fraud detection and prevention. Which of the following actions would best indicate a potential case of insurance fraud during a claims investigation? A. The claimant has consistently provided detailed and accurate documentation. B. The reported loss occurred shortly after new policy with increased limits was purchased. C. The claimant allows unrestricted access to all requested evidence without hesitation. D. The claimant accurately lists multiple witnesses who corroborate the incident. Answer: B. The reported loss occurred shortly after new policy with increased limits was purchased. Explanation: correct. B. Purchasing a new policy or increasing policy limits just before a reported loss is a common red flag for potential fraud. Adjusters must investigate the timing of the policy changes relative to the claim. Incorrect. A. Providing detailed documentation is typical of legitimate claims and is not suspicious. Incorrect. C. Cooperating fully with an investigation often indicates a legitimate claim. Incorrect. D. Corroboration by multiple witnesses supports the validity of the claim. Relevant law: the California Insurance Code and the California Department of Insurance (CDI) emphasize the identification and investigation of fraud, including analyzing behavioral red flags and suspicious timing of claims. Question 2. Scenario type. Topic: Property insurance basics. Mr. Franklin recently experienced a fire that partially damaged his commercial building. His policy provides replacement cost coverage, but during the claim adjustment, he insists on receiving the replacement cost value before completing the repairs. What should Mr. Franklin expect under standard claims practices? A. He will receive the replacement cost value upfront. B. He will only receive the actual cash value until repairs are completed. C. He will receive no payout unless repairs are completed within 30 days. D. He will be reimbursed for full replacement cost regardless of repair status. Answer: B. He will only receive the actual cash value until repairs are completed. Explanation: correct. B. Under most replacement cost policies, the insurer initially pays the actual cash value (SCV) for the damaged property. The additional amount to cover replacement cost is paid only after repairs are completed. This incentivizes repairs and ensures that the insurer is covering costs genuinely incurred. Incorrect. A. Replacement cost value is not paid upfront unless explicitly stated in the policy. Incorrect. C. Policies do not universally impose a strict 30-day completion requirement. Timelines may vary, but reasonable efforts must be made. Incorrect. D. Reimbursement for full replacement cost is contingent upon repair or replacement within policy terms. Relevant guidelines: California insurance policies adhere to fair claims settlement practices regulations, ensuring timely and fair handling of claims while preventing overpayment. Question 3. Topic: Ethical practices and standards. An adjuster receives an offer from a contractor to split profits if the adjuster refers claimants to the contractor for repairs. How should the adjuster handle this situation? A. Accept the offer only if the contractor is licensed and experienced. B. Decline the offer and report the contractor to their supervisor or legal department. C. Accept the offer as long as it does not increase the claimant's costs. D. Negotiate a higher percentage of the profits before agreeing. Answer: B. Decline the offer and report the contractor to their supervisor or legal department. Explanation: correct. B. Accepting kickbacks is unethical and violates California's Fair Claims Settlement Practices regulations. Reporting such offers is mandatory to maintain transparency and integrity. Incorrect. A. The legality and ethics of the contractor's credentials are irrelevant. Profit sharing in claims is prohibited. Incorrect. C. Profit-sharing arrangements, regardless of claimant costs, compromise the adjuster's impartiality and are strictly prohibited. Incorrect. D. Negotiating further violates ethical standards and worsens the infraction. Relevant rule: California Insurance Code Section 790.3 prohibits unethical practices, including financial arrangements that create conflicts of interest. Adjusters are bound by a code of conduct ensuring impartiality and integrity. Question 4. Topic: Claims process during the investigation of a property claim. The adjuster determines that the damage was caused by a peril explicitly excluded in the policy. How should the adjuster proceed? A. Deny the claim and provide a detailed explanation of the policy exclusion. B. Deny the claim without providing specific details, as exclusions are self-evident. C. Approve the claim if the policyholder is unaware of the exclusion. D. Seek the insurer's legal team's input before deciding. Answer A. Deny the claim and provide a detailed explanation of the policy exclusion. Explanation. Correct A. Under the Fair Claims Settlement Practices Regulations, insurers must provide a clear and detailed explanation of the reasons for claim denial, including references to relevant policy language. Incorrect B. Exclusions must be explicitly communicated. Adjusters cannot assume they are self-evident. Incorrect C. Ignorance of policy terms does not obligate the insurer to cover excluded losses. Incorrect D. While legal input may occasionally be necessary, this situation does not require it if the exclusion is clear. Relevant rule. California Insurance Code Section 790.3H requires timely and adequate communication of claim decisions to policyholders. Question 5. Scenario type topic. Automobile insurance MS. Davis was involved in a 3-car accident where she was partially at fault 40%. Her vehicle sustained $10,000 in damage, and the other 2 vehicles involved claimed $15,000 each for damages. MS. Davis carries $25,000 in property damage liability coverage. How much will her insurer pay under her liability policy? A. $15,000. B. $25,000. C. $30,000. D. $40,000. Answer B. $25,000. Explanation. Correct B. MS. Davis's liability coverage limit of $25,000 caps the insurer's responsibility for damages to the other vehicles, even though the claims total $30,000. $15,000 plus $15,000. Her coverage does not exceed the policy limit. Incorrect A. $15,000 reflects the claim from one vehicle but does not account for both claims. Incorrect C. $30,000 exceeds her policy limit. Incorrect D. $40,000 is an incorrect calculation as liability coverage does not cover damages to MS. Davis's own vehicle. Relevant guideline. Liability limits under auto insurance policies as per California law cap the insurer's obligation regardless of actual damages. Question 6. Topic. Ethical practices and standards. An adjuster is handling a claim for a policyholder who is a close family friend. What is the adjuster's best course of action? A. Handle the claim professionally and avoid mentioning the relationship. B. Assign the claim to another adjuster and disclose the relationship to their supervisor. C. Proceed with the claim only if the policyholder consents. D. Expedite the claim process to assist the family friend. Answer B. Assign the claim to another adjuster and disclose the relationship to their supervisor. Explanation. Correct B. Handling a claim for a close friend creates a conflict of interest, violating ethical standards. The adjuster must disclose the relationship and reassign the claim to ensure impartiality. Incorrect A. Concealing the relationship breaches ethical guidelines. Incorrect C. Consent does not negate the conflict of interest. Incorrect D. Expedite handling for personal reasons violates fairness principles. Relevant rule. California Insurance Code Section 790.3H and the adjuster's ethical code prohibit conflicts of interest that could compromise impartiality. Question 7. Topic. Workers' compensation insurance. Which of the following is not a standard benefit provided under California's workers' compensation system? A. Wage replacement for lost income. B. Medical treatment for work-related injuries. C. Pain and suffering damages. D. Rehabilitation services for injured workers. Answer C. Pain and suffering damages. Explanation. Correct C. Workers' compensation laws in California do not cover non-economic damages like pain and suffering. Benefits focus on economic losses and recovery. Incorrect A. Wage replacement is a primary component of workers' compensation. Incorrect B. Medical treatment is essential to workers' compensation benefits. Incorrect D. Rehabilitation services are provided to help injured workers return to the workforce. Relevant law. California Labor Code Sections 3200, 3219 detail the scope of workers' compensation benefits excluding non-economic damages. Question 8. Scenario type. Topic. Liability insurance. Mr. Smith operates a small business and has a general liability policy. A customer slips in his store and sues for $50,000 in medical bills and lost wages. Mr. Smith's policy has a $1,000 deductible and a $100,000 liability limit. How much will the insurer pay if the claim is valid? A. $49,000. B. $50,000. C. $99,000. D. $100,000. Answer A. $49,000. Explanation. Correct A. The insurer pays $50,000, the claim amount minus the $1,000 deductible, totaling $49,000. Incorrect B. This ignores the deductible. Incorrect C. $99,000 miscalculates the claim and deductible. Incorrect D. $100,000 exceeds the claim value. Relevant principle. Deductibles as outlined in general liability policies are subtracted from the insurer's payout. Question 9. Topic: Technology in claims adjusting. Which of the following best describes the role of claims management software in modern claims adjusting? A. It automates claim payments without requiring human oversight. B. It provides tools for efficient documentation, tracking, and analysis of claims. C. It replaces the need for adjusters in the field entirely. D. It ensures compliance with all state and federal laws automatically. Answer: B. It provides tools for efficient documentation, tracking, and analysis of claims. Explanation. Correct B. Claims management software streamlines processes such as documentation, tracking, and analysis, but adjusters remain responsible for decisions. Incorrect A. Automation is limited to administrative tasks, not payments. Incorrect C. Field adjusters are still necessary for investigations. Incorrect D. Compliance requires adjusters' expertise, not just software capabilities. Relevant guidelines. California Insurance Code Section 1871.4 requires adjusters to use technology appropriately without compromising legal compliance. Question 10. Topic: Policy provisions and coverage. Which of the following best defines the purpose of an insurance policy's exclusion clause? A. To limit coverage for specific risks or situations. B. To expand coverage beyond standard perils. C. To specify conditions for policy renewal. D. To determine premium amounts. Answer: A. To limit coverage for specific risks or situations. Explanation. Correct A. Exclusions clearly outline risks or situations not covered by the policy to manage the insurer's exposure. Incorrect B. Coverage expansion is done via endorsements, not exclusions. Incorrect C. Renewal conditions are found in policy terms, not exclusions. Incorrect D. Premiums are determined by underwriting criteria, not exclusions. Relevant law. The California Insurance Code mandates clear communication of exclusions to avoid disputes. Question 11. Topic: Policy renewal and non-renewal. An insurer decides not to renew a homeowner's policy due to a significant increase in claims frequency by the insured. What is the minimum notice period required under California law for non-renewal? A. 20 days. B. 30 days. C. 60 days. D. 75 days. Answer: C. 60 days. Explanation. Correct C. California law requires insurers to provide at least 60 days notice before non-renewing a homeowner's policy. Incorrect A. B. These timeframes are too short for non-renewal notifications. Incorrect D. 75 days exceeds the statutory minimum requirement. Relevant law. California Insurance Code Section 678 governs non-renewal notice requirements. Question 12. Topic: Subrogation. What does subrogation allow an insurer to do? A. Transfer the risk of a claim to another insurer. B. Seek reimbursement from a third party responsible for a loss after paying the insured. C. Cancel a policy after a loss occurs. D. Reevaluate claim payouts at any time after settlement. Answer: B. Seek reimbursement from a third party responsible for a loss after paying the insured. Explanation. Correct B. Subrogation enables the insurer to step into the insured's shoes to recover amounts paid to the policyholder from a liable third party. Incorrect A. Subrogation does not transfer risk between insurers. Incorrect C. Policies cannot be cancelled post-loss under subrogation. Incorrect D. Claims cannot be unilaterally revisited after settlement unless fraud is involved. The relevant principle. Subrogation rights are outlined in most insurance policies and supported by case law. Question 13. Topic: Claims investigation. An adjuster receives a claim where the policyholder is suspected of fraud. What should the adjuster do? A. Deny the claim immediately. B. Conduct a thorough investigation and document all findings. C. Notify law enforcement without further action. D. Process the claim normally unless evidence of fraud is provided by a third party. Answer: B. Conduct a thorough investigation and document all findings. Explanation. Correct B. Adjusters must investigate suspicious claims diligently, documenting evidence before making a determination or involving law enforcement. Incorrect A. Immediate denial without evidence violates fair claims practices. Incorrect C. Law enforcement involvement may be necessary, but should follow evidence gathering. Incorrect. D. Adjusters must act proactively when fraud is suspected. Relevant law. California Insurance Code Section 1871.4 addresses handling of fraudulent claims. Question 14. Scenario type. Topic. Umbrella policies. Mr. Lee has a homeowner's policy with a $500,000 liability limit and an umbrella policy with a $2 million limit. A guest is injured on his property and sues for $1,500,000. How much will the umbrella policy pay if the homeowner's policy covers the claim? A. $500,000. B. $1 million. C. $1,500,000. D. $2 million. Answer. B. $1 million. Explanation. Correct. B. The homeowner's policy will pay $500,000, its liability limit, and the umbrella policy will pay the remaining $1 million to cover the $1,500,000 claim. Incorrect. A. C. D. These options either miscalculate the layers of coverage or exceed the actual claim amount. Relevant principle. Umbrella policies provide excess liability coverage once the primary policy limits are exhausted. Question 15. Topic. Business interruption insurance. Which of the following is typically not covered under a business interruption insurance policy? A. Lost profits due to a covered peril. B. Ongoing expenses during downtime. C. Costs of relocating the business temporarily. D. Repairs to physical property damage. Answer. D. Repairs to physical property damage. Explanation. Correct. D. Repairs to property damage are covered under property insurance, not business interruption insurance. Incorrect. A. B. C. These are standard components of business interruption coverage. Relevant rule. Business interruption policies compensate for lost income and additional expenses caused by covered perils. Question 16. Topic. Endorsements. What is the primary purpose of an endorsement in an insurance policy? A. To change the coverage terms or add specific provisions to the policy. B. To cancel the policy. C. To provide a claim denial explanation. D. To transfer the policy to another insurer. Answer. A. To change the coverage terms or add specific provisions to the policy. Explanation. Correct. A. Endorsements modify the original policy terms by adding, changing, or excluding specific coverages. Incorrect. B. C. D. Endorsements do not serve these functions. Relevant concept. Policy endorsements must be in writing to be enforceable. Question 17. Scenario type. Topic. Collision versus comprehensive coverage. A tree falls on Jane's parked car during a storm, causing $3,000 in damage. Which part of her auto insurance policy will cover the damage? A. Collision coverage. B. Comprehensive coverage. C. Liability coverage. D. Uninsured motorist coverage. Answer. B. Comprehensive coverage. Explanation. Correct. B. Comprehensive coverage applies to non-collision events such as weather-related damage. Incorrect. A. Collision coverage applies only to accidents involving the car's motion. Incorrect. C. D. Liability and uninsured motorist coverages do not address physical damage to the insured's car. Question 18. Topic. Insurable interest. For an insurance policy to be valid, the insured must have an insurable interest in the subject of insurance. When must this interest exist for property insurance? A. At the time of policy issuance only. B. At the time of loss only. C. At both the time of policy issuance and the time of loss. D. It is not required for property insurance. Answer. B. At the time of loss only. Explanation. Correct. B. Insurable interest is required at the time of the loss to validate a claim. Incorrect. A. C. Insurable interest at policy issuance is unnecessary unless a loss occurs. Incorrect. D. Insurable interest is always required in property insurance. Question 19. Topic. Named peril versus open peril policies. What is the main difference between a named peril policy and an open peril policy? A named peril policy excludes all risks, while an open peril policy includes all risks. B. A named peril policy covers only specific perils listed in the policy, while an open peril policy covers all perils except those excluded. C. A named peril policy provides broader coverage than an open peril policy. D. There is no difference, so they are interchangeable. Answer. B. A named peril policy covers only specific perils listed in the policy, while an open peril policy covers all perils except those excluded. Explanation. A named peril policy specifies exactly which perils or risks are covered, meaning only those explicitly listed in the policy are protected. For example, if a policy lists fire, theft, and vandalism as covered perils, only those risks will be covered and any other risks are excluded. On the other hand, an open peril policy covers all perils unless they are specifically excluded in the policy. This provides broader coverage because anything not excluded is automatically included. Question 20. Topic: Additional living expenses. If a homeowner is forced to leave their residence due to a covered loss, what does additional living expenses coverage typically include? A. Normal utility bills. B. Increased living costs like temporary housing and meals. C. The cost of permanent relocation. D. Loss of property value. Answer: B. Increased living costs like temporary housing and meals. Explanation: Additional living expenses coverage reimburses costs incurred beyond the policyholder's normal living expenses during displacement. Question 21. Topic: Underwriting principles. What is the primary goal of underwriting in the insurance industry? A. To deny high-risk applicants. B. To calculate premiums arbitrarily. C. To assess risk and determine appropriate policy terms. D. To process claims more efficiently. Answer: C. To assess risk and determine appropriate policy terms. Explanation: Correct. C. Underwriting involves evaluating the risk level of applicants and setting terms that reflect the level of exposure. Incorrect. A. While high-risk applicants may be denied, this is not the primary goal of underwriting. Incorrect. B. D. Underwriting does not involve arbitrary premium calculation or claims processing. Question 22. Topic: Loss settlement. A homeowner's policy has a dwelling limit of $300,000 with a replacement cost endorsement. If the home is destroyed and the replacement cost is $350,000, how much will the insurer pay? A. $300,000. B. $350,000. C. $50,000. D. Nothing, as the loss exceeds the limit. Answer: A. $300,000. Explanation: Correct. A. The policy pays up to its limit of $300,000 even with a replacement cost endorsement. Incorrect. B. The replacement cost endorsement does not extend coverage beyond the policy limit. Incorrect. C. D. These responses misunderstand the policy limit structure. Question 23. Scenario type. Topic: Insurance fraud. An insured files a claim for stolen jewelry but cannot provide proof of ownership or a police report. What should the claims adjuster do? A. Deny the claim outright. B. Require documentation to verify the claim's validity. C. Approve the claim based on the insured's statement. D. Refer the case directly to legal counsel. Answer: B. Require documentation to verify the claim's validity. Explanation: Correct. B. Adjusters must seek supporting evidence before processing claims. Incorrect. A. C. Denial or approval without investigation violates fair claims practices. Incorrect. D. Legal counsel is not required at this stage. Question 24. Topic: Coinsurance clause. A commercial building is insured for $500,000 with a policy containing an 80% coinsurance clause. The replacement cost is $1 million. If a fire causes $100,000 in damage, how much will the insurer pay? A. $100,000. B. $80,000. C. $50,000. D. $40,000. Answer: B. $80,000. Explanation: The insured should carry at least $800,000, 80% of $1 million, to meet the coinsurance requirement. Since the policy is underinsured, the insurer pays only a proportionate share. Insurance carried, insurance required. X loss $500,000, $800,000, X $100,000 nulls equals $80,000. Question 25. Topic: Liability coverage. Which of the following is generally not covered under personal liability insurance in a homeowner's policy? A. Injuries to a guest caused by the insured's negligence. B. Damage to a neighbor's property caused by the insured. C. Legal defense costs for a covered liability claim. D. Intentional damage caused by the insured. Answer: D. Intentional damage caused by the insured. Explanation: Correct. D. Intentional acts are excluded under liability coverage. Incorrect. A, B, C. These are standard liability coverages. Question 26. Topic: Workers' compensation. Which of the following injuries would likely not be covered under a workers' compensation policy? A. A back injury sustained while lifting heavy equipment at work. B. A car accident while commuting to work. C. Hearing loss from prolonged exposure to loud machinery. D. A fall from a ladder while on a job site. Answer: B. A car accident while commuting to work. Explanation: Correct. B. Commuting injuries are generally excluded unless the employee is on a work-related errand. Incorrect. A, C, D. These are work-related injuries typically covered by workers' compensation. Question 27. Topic: Auto policy exclusions. Which of the following scenarios is not typically covered under a standard personal auto insurance policy? A. A collision with another car. B. Theft of the insured vehicle. C. Business use of the insured vehicle. D. Vandalism of the insured vehicle. Answer: C. Business use of the insured vehicle. Explanation: correct. C. Business use is excluded unless a commercial auto policy or endorsement is in place. Incorrect. A. B. D. These are covered under standard auto policies. Question 20. Scenario type topic: flood insurance. Sarah's home is damaged by a flood, but her homeowner's policy excludes flood damage. What can she do to recover the cost of repairs? A. File a claim with her homeowner's policy under other perils. B. Purchase flood insurance retroactively. C. File a claim with FEMA if she has no flood insurance. D. Use her flood insurance policy if previously purchased. Answer: D. Use her flood insurance policy if previously purchased. Explanation: correct. D. Flood damage is covered only under a separate flood insurance policy. Incorrect. A. B. C. Flood damage exclusions are standard and policies cannot be purchased retroactively. Question 29. Topic: policy deductibles. How does a higher deductible affect the cost of an insurance policy? A. Increases premiums significantly. B. Reduces premiums. C. Does not affect premiums. D. Increases coverage limits. Answer: B. Reduces premiums. Explanation: correct. B. High deductibles lower the insurer's risk, resulting in lower premiums. Incorrect. A. C. D. High deductibles do not increase premiums or change coverage limits. Question 30. Topic: fair claims practices. An insurer delays the investigation of a claim without providing a reason. Which regulation does this potentially violate? A. The insurer's underwriting guidelines. B. The Fair Claims Settlement Practices Act. C. The Insurance Fraud Prevention Act. D. The Insurer's Reinsurance Agreement. Answer: B. The Fair Claims Settlement Practices Act. Explanation: correct. B. The Fair Claims Settlement Practices Act requires insurers to investigate claims promptly and fairly. Incorrect. A. C. D. These options do not address claims investigation delays.